Hey there, Story Trading VIPs. All right, this is my last two personal days off in September, October period. I'll be back to a full schedule starting Wednesday morning, so I will not be around at all Monday, Tuesday. So tonight we're doing our pre-market prep. Now we can't get, too granular because we don't know what the news is going to be tomorrow, but the big story, the same story is a 200-week moving average on the SPY. You can see how important it is. 3 weeks in a row, we're interacting with that 200-week moving average, and you can see the close of the candles. What's important? It closed above it, so there's still a chance we bounce off this level. And Neeraj has had some analysis in the rooms that he's been sharing, which from a 5-wave analysis. So it's like wave theory or something like that. People are into the waves. Neeraj provides that analysis, and they think, from a Elliott wave perspective, that it is time for a rally, and it makes sense from a 200-week moving average perspective. But I'm not holding my breath. I think the fundamentals lean towards a high chance that we head down lower permanently, like for a long time, quarters or years, right? A couple things I want to mention about this. First thing, two things. What did I slip my mind? All right. First thing, here's the most important thing. I think that the liquidity injection that came from COVID, right from here, the bottom, you see that 2020, you see that, and this whole move up, right? I think this liquidity has now been taken out of the market, so it's corrected for that. And obviously, we know that's happened with ARK, obviously, right? So all that money gone, right? All that extra money is out of the system, but you can see how QQQ is still above its pre-COVID high. You can see that SPY is still above its pre-COVID high, but not by much. And it's, is it coincidental? It's just convenient that the 200-week moving average is basically right at a COVID high. So I think from a fundamental perspective, we can say that free money is out of the system. Okay. So what's it mean going forward? It means if we're going to have significant movement down, if we're going to have a bear market from here, it's going to be an earnings bear market. Okay. Earnings bear market. We have earnings coming up this week. And in fact, let me see if I can pull it up on another screen. There was some earnings calendar shared. Here we go. Okay. Vince shared the earnings calendar. And lots of financials, right? We had a financial report Friday with Bank of America, Monday, Goldman Sachs on Tuesday. So we'll have the probably big good numbers because of net interest margins on those companies. Netflix is really the big one that stands out. We have also United Airlines on Tuesday, but Tuesday after the close, we have Netflix and United, and I think those are going to be interesting from perspective of consumer demand and consumer discretionary spend. Okay, so think of it that way, right? We're at this level where the interest rate story and the liquidity story, that's all out of the way. And now it's an earnings story. So there's a possibility, maybe the bottom is in. I find it unlikely. I'm really looking for a bounce off of this, but it's possible because history tells you how important this 200-week moving average is. I wouldn't be surprised if we battle this 200-week moving average for a few more weeks, maybe to the downside, right? History shows when you break below it, for the next several candles, it's going to be battling it as a resistance level. Right now, it's battling it as a support level. So an immensely important area. And we're going to have to look at the earnings reports coming out starting this week to try to get a handle on which direction it goes from here. Okay. Other thing I wanted to mention is to the downside, we have to be careful of the bond market blowing up. Okay. We have similarities to potentially what happened with the subprime implosion in 2008, 2009. And remember, we had that financial, which one was it? There was this financial company that had some exposure last week due to the bond situation, right? Let's see if we can find that stock over here. But what I'm trying to say is you want to be extra sensitive to news reports that suggest that, here it is, Credit Suisse, right? So anything related to the bond market, okay, this is huge, unprecedented downward moves in the bond market. So if something's going to blow us up and send us below the 200-week moving average, it's either going to be really bad earnings guidance or it's going to be something with the bond market. okay, that can blow up financial institutions. And I think I don't know if I think Credit Suisse was tangentially related to what's going on in the bond market in Europe. All right, so pay attention to those two things, and of course you have the geopolitics, but we're at that point that's very hard to trade. Either this is a great entry, right? I'm looking at it as just a trade opportunity, looking for a bounce, but it could be the bottom. Highly unlikely, but it could be. All right. So that's the story there. And I'll be back on Tuesday night to see what happened. Now, on to some individual things. Here's a warning sign. RUM, I take clues from individual stocks of the health of the market. And I think the fact that RUM went below $10, 1133 was its support and subsequently below 10. This is a sign. This is one of the last bastions, the last areas in the market where you're seeing premiums, right? This had a big sentiment premium. It's a function of excess liquidity. It's a function of how much people have extra to spend, right? If they have extra money in their pockets, they're like, yeah, I'll philosophically support Rumble, right? I'll philosophically support GameStop, AMC, Truth Social, all that kind of stuff, even if it's fundamentally overvalued. Now, when you don't have money to buy food or pay your mortgage, you start rethinking those priorities. So sometimes I'll actually, instead of looking at the overall market to kind of guess where the individual stocks will go, sometimes I do it on the reverse, and I'll look at the health of individual companies to give you a hint of what the overall market's going to do. So I find this very worrisome that Rumble broke that support. I think Rumble can make a move to $6-7 range. Probably not interested in picking up more unless we get a 7 handle, depending on the path it gets there and depending on the volatility and the slope of the move. Maybe I'll pick some up at 8 or 7, something in there, maybe 6. We'll have to play it by ear. I did sell half of my trading shares last week. Maybe I should have sold all, but I sold half and I picked up XXII. That turned out to be a good swap. Maybe I should have done it with all of it, but yeah, that's a warning sign to me. So keep that in mind. RUM. Now, DRIO. We were looking for news. Nothing seemed to come out yesterday from Aetna that would indicate big like DRIO. But don't forget, October 17th is where you have the new head of this chronic health management division, digital health management division at CVS, which is exactly the department that we think DRIO is involved in. So the head of that department starts tomorrow. It was interesting that CVS put this out ahead of time, indicating perhaps there's going to be a follow-on, some sort of announcement tomorrow. So possibility we get that news tomorrow. If not, I think, could be November 1st. That's your drop dead. If we don't get it by November 1st, something is wrong. Okay. Now, if we do get this where your resistance levels, you can see the 20-week moving average here at 545. I would hope we get above there. There's lots of different resistance levels here. You have one at 550. You have a little bit of 6. You have some at 640. Then you have the big one at 769, right? 769. If you get there, man, I would probably sell a significant chunk personally. This is my largest position, but I think I picked up a lot in the 4s. I think it went below 4, right? I did. I picked up some even below 4. So I'd probably reduce personally because of the at that point I'd be making good money on DRIO. I've lowered my cost average substantially. So if it goes to 770, I think that's a big resistance level. I'll definitely sell some there. But we have also, don't forget, Friday morning. If you're not a VIP yet, if you're looking at the recording on this, Friday morning, I think it's 11 a.m., we have the president of DRIO North America division that does the sales for North America, Rick Anderson. So maybe we'll get some nuggets out of him Friday. So a bunch of potential catalysts for DRIO this week, a bunch of resistance levels here, 550 next, and 770, really a strong resistance, but the long-term thesis. Hopefully we get stack catalysts over the next several months and we can break out over 770, but I'm definitely going to be selling some at 770. And that reminds me to double down on what I've been telling you, that if we close below the 200-week move, not just close below, but if it proves to be resistance, we close below it, it tests it to the upside, it proves to be resistance, then I'll be convinced we're entering a multi-quarter, perhaps even multi-year bear market where you really don't want to be in any stock that has the risk of that they're going to need money, right? There's going to be dozens of companies that are going to go bankrupt, high-profile companies, and there may be hundreds of companies that no longer trade publicly. Hundreds, maybe even thousands. This is going to be a bloodbath, I believe, over the next few years if economically things don't turn around soon and if we close below that 200-week moving average. So that's another reason why now DRIO has a 50 to 75% chance right now at turning profitable before they raise money. If you're in a stock that has no hope of getting profitable before they raise money, then I think you got to get out of those stocks soon. Or if you're trading them, get your money, run, and start thinking about other places. Look, mega caps are getting really cheap, and that's going to make micro caps less and less and less attractive over the next several quarters as the mega caps get cheaper. So just be careful out there and think of these dynamics. Talk is the other one. This is just a trade for me. I'm hoping they get some news, some buyout rumor, something like that, and I'll be out quick and easy. That's my plan. I'm down on it now, but I've been averaging down. We'll see. So I'm not panicking out of that. They have plenty of cash for the time being. XXII, this is a new one that's like I'm really, really excited about. We got a nice XXII research group going for the VL on cigarettes. I'm going to be inviting more people who are really knowledgeable on XXII. This might become one of my largest holdings. We'll see. In the meantime, 50 DMA is your next resistance level. I missed selling some at $1.25. That's where I wanted to sell. I hit $1.24, at least some of my trading shares. So I think we have a good shot again of hitting $1.25. It's $1.1011. I think early this week, I wouldn't be surprised if we hit $1.25. There's catalysts coming up. When the news comes, it'll definitely hit at least $1.25. It might even break above the 50-day moving average and move higher to the next resistance level, maybe 150, and then pull back from there. So we'll have to play that as the news comes out. But this is a very, very interesting stock. There is an issue with sentiment because of past management not being credible. But if this is the inflection point, which is possible, this could be a 10-bagger. It could be a 10-bagger within 12 months. So very, very interesting opportunity that we got to research, XXII. SPRC, this is just a quick trade for me. I just want to move the 200 period out of here, the moving average, because I want to show you that this looks really good. Now, I can't say too much about it, except I'll put this out. Hey, this is story trading. It's all about collaboration. If you have time to research this, go ahead and research this. I think this might be someone who I trust gave it to me. I'm borrowing his conviction on fundamentals, right? So I can't have a big position since I'm borrowing that from him. So if you do your own research, let us know what you find. The technicals are behaving really well above the 50-day moving average. And this is just a trade for me that I'm going to be selling on a pop for right now, but there might be something there. RELL, $18 support right there. Really good entry at $18 because it was previous resistance right there. You can see it. That'll be a beautiful pickup. It doesn't mean it can't go lower. It can definitely go to the next support of $16, but this is the type of stock you want to be picking up and owning and collecting in the environment we're in, not the companies that need to raise money. So RELL is definitely one of those good companies doesn't need to raise money. AIR, same thing. They don't need to raise money. It dipped below 20 DMA support Friday. Actually, did it close right on it? Oh, dipped below it. So unfortunately there for that, but well, we lost for 200. But this is another one that I'll be picking up that, I think is a good idea to pick up at support levels. These are the kind of stocks you want, profitable companies. AIR, RELL, BCRX, we pointed this out Friday morning. Unfortunately, didn't have a good day. Fortunately for me, I'm not in it, but I like healthcare companies. If you've noticed, we have a big focus on healthcare and biotech into a recession. I think that's something that could do well because it's not really impacted by consumer discretionary spend. So BCRX, I like that stock. We're monitoring KMPH. I really like that stock. We're continuing to monitor that. We have good research group on that. Chris Harbert's been giving lots of good updates on KMPH for us. VTSI, here's another company that's recession resistant, if not recession proof. Good low PE, pulling back. Here's another type of stock that you'll want to buy in this kind of environment and hold rather than the companies that are not profitable. Pet, just a quick possible little trade for me. I have this. This is all right. They're not profitable, not the company you want, not the kind of company you want to hold, but they got a big price target upgrade, I think on Friday, like $10 or something like that. Craig Hallam, $10 a day before. MKM Partners, $6. Very, very, very low float on this one. I mean, absurdly low. I don't know. It's probably like 3 million shares, something like that. So that is something to watch maybe for a quick trade, and I'm out and I'm done. And by the way, speaking of really low floats and low market caps, SPRC has a market cap of 3.5 million with 3.5 million shares outstanding. So that's an interesting one maybe for a trade as well. CANO, we're watching that for buyout. I don't personally do buyout M&A rumors. I know Polo's in it, so thank you, Polo, for letting us know about CANO, and that could cause price increases in talk and DRIO, things like that if that happens. All right, so that's all I'm going to leave you with you guys today. I hope that was helpful. Listen, story trading is all about understanding the story behind the trade, which can only be done with crowdsourced collaboration. I just try to give a sample here. I try to show use cases of how that works. I try to show, how to make sense of markets. When stocks go up and down, we can identify the reasons. A lot of times the reason could be just sentiment or technicals. Interestingly, there was an article shared by Neeraj where about the Elliott wave analysis saying, hey, that there's not always like a headline reason, but there could be a technical reason, which is a reflection of sentiment, which is very interesting, right? The Elliott wave analysis is saying is actually a reflection of human psychology and sentiment, right? So the point is nothing is ever random. And if you keep on researching and learning, and it's a lifelong learning process over decades, right? And for me personally, maybe you guys don't care to make sense out of markets, but for me, and it's story trading, I love this lifelong learning process of making sense out of markets, because at the end of the day, it's all human beings that are trading. Algos are, coded by human beings, are turned on and off by human beings. A lot of times algos are just trading back and forth. So the net, if you have a net increase in interest for purchasing or a net increase in interest for selling by human being based on news catalyst sentiment, things like that, that'll overcome the algos. So at the end of the day, using say, hey, algos just cause chaos and it doesn't make sense as a cop out, it's not true. To just say, hey, markets don't make sense, people don't make sense, people are crazy, that's not true. All right. People are human beings and emotions can make sense. It's important to understand the psychology component of everything that goes into this, because psychology plays a role in asset pricing, plays a role in price of gold, plays a role in price of gold, art, gold, even real estate. Psychology has a lot to do with price of real estate as well, and also has a lot to do with the price of stocks, and it has to do with the volatility of stocks and the way it moves, right? All of this can be explained. It may be difficult to explain it. We may have to explain it retrospectively sometimes. So back and say, aha, that's what happened at that moment. But be assured there is always a reason. So, story trading is about collaborating with other people to hear different perspectives to give you a better chance of understanding the reasons behind the ups and downs. Because from my perspective, story trading perspective, you can take advantage of that and become a better trader and better investor if you understand the whys of the ups and downs, right? And understand that's not for everybody. It contrasts with technical trading. They don't care about the reasons why, or fundamental investing. Fundamental trading is just a discipline. It's a way to have discipline. That's it, right? It's absolutely not true that stocks trade purely on fundamentals. It's absolutely not true that they should trade purely on fundamentals. But the good part of it, if you want to go down that path and be a pure fundamental trader, is that it gives you discipline. It gives you reference points of when to buy and sell. So that's great if you're into that, but it's not how the market actually works in reality, right? Markets are dynamic pricing. Prices go up and down based on sentiment, technicals, catalysts, and fundamentals. So while I'm not here the next 2 days, I encourage everyone to collaborate with each other to understand and try to make sense of markets, try to make sense of why it's going up or down. If you absorb that knowledge over time, you become a smarter trader or investor, and then you can do just a little bit of predicting. Your predictive abilities become better over time, especially for short-term time frames, right? When an event happens, a catalyst happens, an earnings happens, you'll be armed with the history of knowing how things work. You'll be armed with that history, with that knowledge, to be able to guess how is the stock going to move today and in the near term over the next few days. And that's what I aspire to do here at Story Trading. I think it can really, really work. So go ahead and do that with the community the next couple of days. I'll be back Tuesday night. I missed a comment here. Do you think tax loss selling becomes significant for many stocks now? Tax loss selling would be used to offset profits, right? I think tax loss selling was huge last year. I think it's huge in years where people are making a lot of money. I'm not sure what people will be offsetting. Net, are people making money this year that they need to tax loss sell something? I'm not sure that will be having an effect this year personally, but it's a good question. Maybe we'll collaborate with other people. Maybe I'll look at Twitter to see opposing views than the one I just gave. Thank you very much, Matt, for that question. And with that, I'm out of here. I'll see you Tuesday night. Good luck. I hope we get lots of great news on DRIO and TALK and XXII. I hope we get some bounces off RELL support levels and KMPH support level there, VTSI. I'll be back Tuesday night. It's tough. We're in this together, but we'll make it through and we'll make big money at the other side of the rainbow. Take care, guys.